What's going on, everyone? We're going to take a look at part 2 of the exchange traded ecosystem. This is found straight off BlackRock's website. We can use their own information that they disclose deep within their website to reverse engineer their methodology and see and track, if they're doing how well they should be doing. So anyways, this is part 2. If you haven't seen part 1, you can click this link here. I'll leave this PowerPoint below, or you can find it on my channel. It is available for you to watch. So a broad, diverse universe, this paper looks deeper into the US ETF ecosystem to analyze the breadth and scope of the AP universe. Now, whenever I say AP, all I mean is a bank or a market maker, because that will fit the role of an authorized participant. And if I say issuer, it's going to mean BlackRock in this case, because the ETF in question, IJR, is BlackRock issued. It draws on data disclosed by fund companies annually, as required by the SEC. Most ETFs are supported by numerous APs, or banks and market makers. On average, each ETF has 27 contracted APs and 5 active APs. Now, the difference between those two, a contracted AP has an effective agreement in place with the ETF issuer even if the AP does not regularly create or redeem shares. An active AP, all that means is that the participant has created or redeemed shares of an ETF within the fund's most recent fiscal year. Now, a fiscal year, all that is a year determined by the business, so it's not a calendar year. Not all APs are active at the same time. For example, some institutions may complete formal paperwork to become an AP so that they can participate when they see opportunities to profit. This presence of contracted APs helps ensure vibrant competition exists to provide ETF creation and redemption services. Now, this is where it gets interesting. If an active AP were to step away, another contracted AP could step in to execute creation and redemption activity, even if they hadn't been active in the fund previously. So there's definite room for error there. Seems legit, right? Most ETFs are supported by numerous APs. This is from the previous slide. Now remember, it said that ETFs have 27 contracted and on average 4 or 5 contracted or active. So if we look at this figure 1 right here, there's 54 contracted APs in the US listed ETF universe total, 37 active APs, 27 average contracted APs per ETF, and then 5 average active. So out of the 37 total, there's on average 5 active per ETF, and then out of 54 total, there's an average of 27 per ETF. So remember, active APs have created or redeemed shares within the last fiscal year, and contracted APs have an effective agreement in place even if they do not regularly create or redeem shares. So it's basically like whenever we need you, you can come back and hop on this because, for some group manipulation here. Size matters. Gig. Size matters because larger funds, those with more assets under management or AUM, typically have a higher trading volume. They tend to be supported by a greater number of APs than funds with smaller AUM. So put that in perspective. We know the AUM of IJR is 67.9 billion. So you can imagine there's every bank and AP market maker is on this thing. In fact, it's not uncommon for small funds to have limited or no primary market activity. There were no creations or redemptions over the reporting period in nearly 7% of funds with 50 million or less in assets. Generally, increased trading volumes result in higher number of active APs. So what do we remember about IJR? Lots and lots of volume. We had that one candle at 12:22 p.m. Eastern Time, I believe on the 12th, that had 8 million volume in 1 minute. So for example, funds that had an average daily volume of 100 million or more, that's 100 million in dollars, had an average of 12 active APs over the reporting period, while funds with an ADV of 2 million or less had an average of 3 active APs. So basically, if we add this together right here, this is the average 44, 44 APs involved on average when you're looking at a fund with greater than 500 million in AUM, which would apply to IJR. So that you could conclude, based on this calculation from their own website, there's probably more than 44 banks and market makers involved in this process. So participation across asset class. So this is another figure from this document here. Some asset classes require specialized infrastructure and or expertise, resulting in fewer APs that are equipped to support these funds. Still, there's a robust group of APs at the ready, even in these more complex products. So this is figure 3, average contracted and active APs by asset class. So we can see here that domestic equity, the average amount of contracted and active APs adds up to about 33. And then international equity is 31. Domestic fixed income, about 35. And then international fixed income, 32. Figure 4 is average contracted and active APs for fixed income ETFs, which doesn't really apply. However, we do have a government fund in IJR, so I guess we could include the government in here. So that's another 36 APs. So let's continue on. So engagement between BlackRock and APs. So if you look here, this is a figure from, again, their own website, figure 6. Even small ETF issuers by AUM utilize the breadth of the ETF marketplace and engage with multiple APs. APs capitalize on the wide range of ETF offerings. The top APs have contracts for 1,500 to 1,900 ETFs each and actively engage with anywhere between 180 and 1,600 ETFs. So you can see the examples of ETF issuers. We have iShares, which is BlackRock. We have Vanguard, State Street, Invesco, Charles Schwab, Van Eck, ProShares, WisdomTree, JP Morgan, Renaissance Capital. Now you can see, based on this, iShares dominates the industry quite a bit. So diverse playing field? Not really. Because if you look at this figure 7, gross creation redemption activity by AP, Bank of America accounts for nearly 25% of all created and redeemed shares. And this was as of, I believe, May 2020 is when the last time this data came out. In total, 37 APs created and redeemed shares over the reporting period. So when you take back that picture from the previous slide right here, and we see sample APs by ETF issuer, and then we go forward one more, it says right here, in total, 37 APs created and redeemed shares over the reporting period. Well, hold on a minute. That's, I think, 72? No, 72 APs right there, just from iShares, so something's off about that data. And then of the little pie here, we have Goldman Sachs, Bank of America, JP Morgan, Morgan Stanley, Societe Generale's, Citadel, Credit Suisse, Virtu, Citi, Bank, and others. So the real activity is on the exchange, according to them. This is figure 8, industry primary and secondary market activity. According to this data, APs are the key contributors to smooth ETF operations, but they are responsible for only a small percentage of ETF activity. The ratio of secondary market activity, which is the market you and I trade on, is 5 to 1. That means supposedly we trade 5 times more amounts of volume on the secondary market than the primary market. 4.1 trillion on average gross primary, 22 trillion gross secondary. Maybe at the time that was accurate, but I don't think that's the case now. So if we do a health check based on everything we just read and everything that we see, so back in December 2020, right, this IJR had GameStop in it. Just about the same amount of shares, however, way less of a market value because it was way less expensive back then. So they had it weighted at 0.12 back then. And then they also had XTSLA back then. So that's odd that this has been there this long. So the market value of XTSLA back then was 439,260,000, weighted at 0.78. Then you fast forward to today, and they've nearly doubled their market value. They're just a little bit more than doubled it. And then as far as GameStop, nearly 10 times the market value that it had. And weighted now at 0.91 rather than 0.78. Or I'm sorry, 0.12. And then XTSLA is actually weighted 1.24 opposed to 0.78 about a year and 3 or 4 months ago. So the cash difference from December 2020 to now, if you take a look at the cash, they have a USD cash holding in there. Yeah, it's negative $863,732,000 or shares. And then if you look at the one in December 30th, 2020, it was only negative 293,382 shares. So basically, we saw a nearly a 600 million share decrease since 2020, not even a year ago. So what is this? What is this USD Cash and why is it negative? And then all of a sudden we have a USD Cash Corporate Act as well on the 14th of 2021 when it was not in the 2020 holdings. Something's going on here. Because each share, based on this XTSLA's AUM or their net asset value, it's $1. So they pay $1 per share. So obviously we know that GameStop's been an ongoing thing with these hedge funds, but 400 million shares or 600 million shares nearly in less than a year at $1 a piece. What's going on here? I don't know. But that was part 2, looking at their overall ecosystem, how they explain it in their own words. This is good stuff we can use to reverse engineer their own methodology, and we can pick out things that just don't make sense, like this right here. So interesting stuff. Hope this was helpful, and you guys have a good rest of your night. And if anything else comes out, I'll let you know.